Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, June 28th. Michael Boutros here with you this morning. Ziad, Sandy, Pete, Mark, Graham, Carlos, great to be with you here this morning. Aurelian, Alan, good to see everyone in the room. So we are getting some commentary from the ECB's Mario Draghi, or regarding the ECB's Mario Draghi's comments yesterday. Moving the euro here today on some weakness. Still looking to fade that weakness, to be quite frank with you guys. We'll go over the implications of that, basically coming out and saying that the markets were interpreting Draghi's comments yesterday, or were misinterpreting Draghi's comments yesterday, which came off relatively hawkish. Man, obviously we saw the euro really rip through the opening range high of the week. We came into resistance overnight, and certainly that held. And we got a little pullback today on these remarks from the ECB. The source is really unknown. It hit all the wires about 8:15, and the euro abruptly dropped. You did see the dollar get a nice little pop off that, but again, these types of commentaries, guys, just interruptions. We'll go over the dollar index and euro. So for today's menu, here's what's on the lists. Listen carefully. If your currency or your trade is not on here, feel free to throw them on the message board. We'll start off with the DXY, Kiwi, Sterling, Sterling Yen, and Euro Kiwi from last night. We'll take a look at Aussie, Dollar Yen, and Euro Yen from the previous update. And finally, Aussie Yen, Dollar CAD, still one of my favorite trades, and Dollar ZAR. Dollar ZAR did turn. We got that rebound that we wanted to play, and now that's at current resistance as well. Take a quick look at gold and what that's doing from this point. If you have any pairs or currencies or trades you'd like to review, assets, commodities, feel free to throw them on the message board. Sandy here saying, hi, Michael. Was good that I talked with you on Sterling Oz short. I got out break even and entered long 68. Good. I was thinking about you when I saw it this morning. Euro Oz ripped higher too, right? Although Aussie didn't really give us that weakness, the Euro and Sterling both saw some strength. So well played, Sandy. And like I always say, you know, it sucks to get stopped at break even, especially when you're in the money. But when the fundies, or when the fundamental technical, what I'll say, picture changes for us or starts to shift, that break even stop is always a good alternative. So we'll definitely take a look. Sterling Kiwi worked out better for a long. I love it. I'm still waiting on the Kiwi to finally turn over. Well, this will be the first pair we'll look at today. It still looks convincing. It just hasn't followed through. So Sandy, on that trade, if Kiwi finally starts to turn, I think Sterling Key's got a lot of upside to go still as well. So we'll take a look at that if we got time. Let me write that down. Pound Key. Okay, let's jump right in. So here's where we stand on the dollar index to start off the session. So here's the tag of 96.47. We talked about this yesterday. At key 618 retracement, this is from the advance off the lows we made in 2016. Just lower, the next downside target, okay, is 95.89. That's the actual swing low that we made back here on election day. And that coincides nicely with a slope parallel that we've been following. Caught the lows back here in May. Almost caught the lows back here at the opening range for the month. That converges on it over the next few days, right around 96.90, 95.90, 95.89. That's your next downside target. Now, I do want to note a couple of things. Momentum looks a little tired. Today's close will be paramount, whether we close above or below this 96.47 level. But here's what the intraday chart looks like. Excuse me. You're recovering off of oversold territory here. The downside of the trade, what we were looking for, that same 95.89 level, look here. Okay. Actually, for the current slope that we've been following, the 50 line actually converges on that, you know, basically heading into Asia tonight. So I'm still of the mindset that, you know, you could get one more draw lower in the dollar. Resistance at this point is 96.95, 96.96, former low day close. We're going to go ahead and readjust this now. This retracement is now null and void. We've taken out the lows. So I'm going to scratch that. But either way, former low day close for the year, 50 line, which gave us some nice pivots, that converges on 96.96. So, you know, I like it bearish below this. You could get another pop higher. Again, keep in mind you do have some data on tap later today out of the United States. You do get those wholesale inventory numbers and advanced good trade balance at 12:30 Eastern, and then pending home sales a little bit later in the afternoon. That being said, the major release for the dollar and all the dollar crosses still doesn't come till Friday. Okay, and Friday is going to be the big player. You have the core PCE numbers, which is, again, I always say the Fed's preferred gauge of inflation, and the final trade day for the month. And you're heading into a holiday weekend. Monday markets will be half day on account of 4th of July, which is on Tuesday. So guys, even adding more so to the precedents heading into the end of this week to take a little bit more of a cautionary approach on account of the data, thinning markets, again, end of the month, end of the quarter, and certainly not the best time to be intraday trading. So I really got to just preface any of the setups that we go over today, heading into Friday, just use that caution there. That being said, dollar index, you're at resistance right now. You're trying to break that median line. I do want to see how the U.S. markets open. Below here, the immediate focus is lower. If we do settle and close a candle above that region, this is your bearish invalidation near term. As long as you stay below 96.96, I'm still going to favor the downside move here in the index. Questions? Okay, let's jump in to Kiwi dollar. This thing, if it doesn't start moving soon, I'm gonna do something drastic. We've been watching this Kiwi dollar trade for weeks. Yesterday's peak, as we talked about in the webinar, was an exact tag of the 786 retracement from the decline off the highs. It was an exact tag of basic trendline resistance. Extending off the April 2015 high. 1 touch, 2 touches speculative, 3 touches confirm. Add to that the current operative slope on the daily chart here that we've been working with, this pitchfork. You take a parallel off that and extend it off the previous monthly high, it was an exact touch. And on the near-term chart, it's the 786 retracement of this entire decline. So a beautiful area of which you'd start to look for a rebound or a reversal or a kickback. No one's saying the trend's going to reverse per se, but certainly you have divergence, price action pressing a fresh high, the oscillator making a lower high, and you have those longer term resistance levels. So yeah, I'm looking for a pullback, okay? Here's what the intraday chart looks like. We were talking about this since the Sunday update. There was the spike into key confluence resistance. I know there's a lot going on in this chart, guys, but basically they're all just highlighting major key levels that are all converging. Near-term support, 72.62, okay? We've been sitting there. That's the weekly objective, weekly opening range low. So a break below that inherently puts you bearish. And then the 72.60 barrier, or 72.22 barrier, excuse me, that's the level that really needs to give out to confirm a near-term reversal, okay? You have a 3-point touch support. You have basic trendline support off that low. Again, this is just exogenous. We're not going to really stress it, but it converges at the same time at the same levels. And that's the break, I think, that would give us a little bit more of a conviction downtrend. I've been in and out light. As a disclaimer, I'm not in anything with the Kiwi right now. I still do want to get in. I've been looking for entries. I want to get a little bit higher of a pop if I can. But that's really the focus, guys, that break below 72.60 near term to get this thing going. Any questions on Kiwi dollar? Sandy says, my 2 favorite setups for today is the DAX. Okay, and sterling yen. We'll take a look at sterling yen. Karthik says, hello, everybody. Hey, Karthik, great to see you in the room. I think your Kiwi will bounce from 72.60, thus I'm out of my sterling key long. So 72.60, yeah, we've already gotten a couple of bounces on this. Sandy, so, the shallower the bounces get, the better. So if this is going to be utter failure into the U.S. trade session, the emphasis still is on that downside break. But you're absolutely right. Support is support until it gives out. It's the weekly opening range low. We've got to really establish a little bit more of a clear break below this region to really validate favoring the downside here in Kiwi. And it's hard. It's hard to favor the downside in Kiwi, specifically as the dollar was breaking down. But guys, that's something you want to also pay attention to. Despite broader dollar weakness that we were seeing yesterday, and despite the ripperoo that we saw in the euro crosses, and even sterling, right? And the weakness that we saw in dollar CAD, beautiful trade. The Kiwi was unable to make much topside progress, and that's something you pay attention to. So it's also a trade I do like because we like the dollar weaker story and we've been playing the short side of dollar CAD. This is a kind of good way to offset that synthetic hedge, right? So although we're, excuse me, short dollar CAD, which is essentially a short dollar position, a trade like this, if you're shorting Kiwi, puts you on the long side of the dollar. And again, while the technical merits of this trade on its own are bearish, it does offset, a possibility that the dollar kind of rips higher, gives you recovery. So I like playing them both, to be quite frank with you. Take every trade on its own merits. That said, let's get that break below 72.60 and get this sucker running. It's been a very slow, arduous trade, but see if we can't get some momentum going here. And also keep in mind, remember the trigger that we looked at yesterday did give out. I also just want to keep in mind that heading into the U.S. trade session, if we get that bounce higher, the closer you can get to stop against the high here is kind of the best way I want to play it. I don't know if we'll get that rebound, but that's sort of what I'm looking at into the open. Kiwi bounces from the weekly pivot already 3 times in 3 days. I wonder we could shoot this week. I'm not sure what you mean by that, Sandy, if that means a break or not. Possibly. Possibly. Again, keep the... Oh, short this week. Yeah, I mean, ideally, that's what I'm trying to do. Ideally, that's sort of what I'm trying to do. I've been, like I said, I've been in and out. I took a couple of break evens. I took a couple of just really small chips at it, but it just hasn't been able to really get the momentum that we need. Again, there's so much, guys. If you saw there was a piece I published on Daily FX maybe a week ago. Retail positioning, as stands by IG's retail sentiment index, was at a record. Okay, last week. So, and that's on the short side, right? So, that started to come off recently, and again, that suggests that there's going to be a shift, or that there is a shift in broader sentiment happening as well. So I do think it may take a little longer. You might see a little bit more consolidation here before it starts to break down, but larger risk, in my humble opinion, still remains weighted to the downside below 73. And 73, guys, is the 2017 high day close. It's still preserved. It's the high that we made on February 7th. We haven't been able to make one close above that yet. So ideally, I want to stay bearish below that region. Okay, moving right along. So that is Kiwi dollar number 2. Any questions on Kiwi? You're pretty spent on data as far as Kiwi is concerned. You do have new home sales tomorrow. Actually, not even. Activity outlook tomorrow from Kiwi and building permits. But I wouldn't necessarily think that's anything major market moving for the Kiwi. Next up on tap from last night, number 3 is British pound. Here's what the sterling looks like. I just wanted to highlight the setup and the levels. I know there's a lot. I even mentioned it in the piece yesterday. There's a lot going on in this chart. I recognize that fully. So again, Kiwi levels unchanged. You're now still checking that support at 72.63. Remember, 72.20 is really the breakdown zone. Excuse me. As far as sterling dollar is concerned, let's start off with the daily chart. I just wanted to highlight that, it looks like we've made a topside break, but we're still now testing monthly open resistance in the 618 retracement. This is from the drop off the highs that we made back in September of last year. Decent pivot in price. You have some former swing lows, some former close highs, and the monthly open resistance. There's a whole stacked up region of resistance here, followed by this basic trend line. So while I do like the sterling long story, and we've been talking about that for a while, I just wanted to kind of curb your attention or curb your appetite for the long side from here. I think you can get a little bit of a pullback. You still want to stay constructive above 127, broadly speaking, and we want to see if we can't get that bank break above the monthly open basic trend line resistance. So you kind of have a clear picture of where we are in the broader picture, or the broader scope, for the British pound. Nice support bounce, huge region. This was bullish in validation. So we didn't even make it that low. Here's what sterling looks like on the intraday. And I'm going to clean this chart up. I just wanted to go through it here in the webinar first. You know, we were working with the confines of this descending median line formation. It's not the cleanest thing. The lower parallel did catch the lows. You know, the median line hasn't been all that clean, although if you bring it into a closer time frame, you can see clear-cut market reaction along that slope. Resistance, resistance, break, break, saw acceleration. A little bit messy there, but support, break, saw acceleration, resistance, 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 breach, saw acceleration. And there's the break yesterday. Okay, that former median line parallel resistance now converges on the weekly opening range high, and that gives you a near-term support 27.55. We want to stay constructive above that. And as I was saying yesterday in the report, you know, you're kind of testing near-term resistance now at 28.45. Look for the pullback. If you get a pullback into this region, that's sort of your ideal sweetheart, you know, Goldilocks entry. But largely speaking, you want to stay constructive above this level now. Topside break, you're looking for a 128.90. Okay, that's the 618 of the near-term correction from the highs that we made back in May. And then again, that longer-term trend line converges on the 50 line of the upslope. And on the daily chart, that's all right here. Okay, so they all sort of highlight near-term price action and longer-term price action, sort of zones of interest, just sub 129 or around the 129 handle. So I'm going to go ahead and clean this up since we're together here in the webinar. You don't need this slope anymore. That key region is being highlighted anyway. So keep your eye on 27.55. Let's get this a little bit cleaner. Here's the 60-minute looks like. And again, you can see some nice play on the 50 line. You can see some nice play on the median line. If we do see a little tumble here, that's your entry. Top side, if you're holding longs, 128.90 and then 129 handles, sort of a nice sweetheart deal for near-term resistance. And this is also the breakout zone, guys. So if we were to clear that, it would put resumption of the broader uptrend that we were working with off of last year's lows. So I think it's a clearer picture, finally, for pound. But immediate risk, you don't want to kind of jump into a long from here. I think you can get a pullback. If not, again, look at these two levels as possible areas of near-term exhaustion. Wouldn't necessarily want to fade it just yet, but this is sort of the area of resistance which, if cleared, would open up much larger advance, I think, in the British pound. If that rebounds, can it be an opportunity for going short? Hey, Karthik, which rebounds off of what? Off of this region here to go short? Is that what you mean, Karthik? The way I would play it, I'd rather be buying pullbacks in sterling. But if you're really short-term, Karthik, I'm always, from the 50% retracement. So it'd be a reversal, not a rebound, right? So I'm always of the mindset, listen, I'm the shortest-term guy you can play, you can see. So I will play trades like that, where it's kind of just a rebound off resistance. But what I'll say is this: you kind of want something to put you into that turn, and that would be for me either opening range break for a session. So for example, if you get really deep into price action and you see, for example, the U.S. opening range sets up here and then the U.S. opening range breaks to the downside, sure, I'll take a stop against the high and try to play a pullback real near term, right? But you got to always be recognizing, Karthik, two things. When you're trading counter trend, you always want to be very meticulous with your entries, have a well-defined stop. At the same time, when you're trading counter trend, you typically want to use less leverage, right? Because at the end of the day, Karthik, we both recognize that the trend is up, right? Near-term trend off the lows here is still higher. So I got no problem playing pullbacks. You know, I do that all day long. But if you're going to do that, you want to stay super nimble and, you know, be ready to eat that stop. It's not a trade you want to be stubborn in, for sure. Have a well-defined stop and see if you can't play the pullback. All things held constant on this trade personally, you know, I'm not really looking to play the pullbacks. I'd rather wait for something on the downside to get constructive. And one other thing you want to do, Karthik, is when you're looking at that, take a look at what previous price action has done. You know, how you know, deep have the pullbacks been when you come into our targets? And certainly on the pound, actually, you do get a lot of whipsaw action. So it is a decent candidate, but just recognize when we're trading counter trend, we need to be a little bit different in the way we approach the actual trend, the trade rather. Does that make sense? He says, yep, thank you so much. Hey, you're more than welcome, Karthik. Cheers, mate. All right, that is sterling. Definitely, not my favorite setup per se, but certainly making some progress here on the upside. Stay constructive above 27.55. Like I said, the key levels to look for some reaction. In the meantime, we'll kind of sit and see how this thing opens up the U.S. trade session. Moving right along, number 4, another derivation of the pound yen. I just wanted to highlight this trade. There's a lot of interest in it here in the room. So last night, we were kind of approaching that sliding parallel there. Again, pound levels unchanged. Here's pound yen. Resistance 144.50 into 145.38. I know, excuse me, I know it's a bigger range, but this is pound yen, right? The Widowmakers, a lot of ATR room here. Big region of resistance, you have the 618 retracement of decline off the yearly highs. You have trendline or slope resistance. This slope, guys, is just the same slope we've been following. If you take that parallel of that slope, take it off the high from here, converges on that 618. That's what you're looking at here, this region. So again, just to zoom out real quick, this whole slope that you see here is derived from just these 2 reference points. Sliding parallel caught these 2 reference points. Break saw acceleration. Break saw acceleration. Resistance. Breach, you gapped higher, accelerated, pulled back. This is resistance up here. Now look, you've made it through the monthly open, but the monthly opening range highs, okay, are 140, essentially 144 to 143.95. And that's basically where we're trading right now. So the first break of the monthly open is typically going to be like, all right, that's giving you top side bias, great. It broke out of a near-term ascending median line formation, even better. But now you're heading into the monthly opening range highs, and it's backed very closely by this key resistance range. So I'm not surprised if we do see some kickback here, but the broader trade remains constructive on whole while above this low, which is basically the 140 handle, 139.95, this region. I know that's really far from where we are right now, guys, but just to put things in the picture of where we are in the broader picture, or the broader outlook. Basic trendline support, caught it, former trendline resistance or channel resistance. You want to stay constructive above that zone. Okay, so that's the bigger picture. A breach above 145.40, okay, which is the swing low that you made here pre-Brexit, and would necessitate a break of this slope. Targets the 2017 high day close, that's way up at 147.86. So you can see how much room we have if we clear this region of resistance near term. You do want to stay constructive, but look for some reaction here or possible kickback off that region to get back on the long side. Here's what the intraday chart looks like. And here's what it looked like last night. Okay. A sliding parallel of the same slope that we were following from like the 18th earlier in the month converges on the June open, and that gives us near-term support at 42.75. In my humble opinion, the immediate focus, you still want to stay constructive above this region. And topside levels, like I said, are unchanged. 144.50, the 618, and there's that 145.39 level. Big, big region. So could get some pullback into this. Former slope resistance, been a very nice pivot. Break, acceleration, support, break, acceleration, resistance, resistance, break, acceleration. Should offer some support. Topside targets, unchanged. Unchanged. Beautiful trade. It was kind of messy. If you guys remember, we first highlighted this trade as we were breaking right here. Basic channel resistance. And we wanted to stay constructive while above that resistance. Now we faked out and it broke below in classic sterling fashion. But the quick reversal, recovery, and test back as support really validates the break of that trend line and kept our focus higher. So as we opened up the week, we were right at that 38.2 retracement, looking for the break. There it is. Again, it was a hard trade to get into. Like I said, it was a straight shot. But still want to stay constructive above 142.75 near term. Any questions on pound yen? That's number 4. Euro Kiwi was next up last night. Another one that was, this was the one that was straight up, a straight shot. it kind of just ran. So if you didn't get a chance to get into this one, I don't blame you. Here's what the euro yen or euro kiwi rather look like here. And this is one of those trades where if kiwi finally turns over, you could get all that upside play that we were looking at. So here's the chart on the 120 on the 240. There was resistance yesterday that we were talking about, 156.16 into 156.27. We spiked through, and then again, we got those comments that the ECB was thinking that commentary that the markets interpreted from Mario Draghi was misinterpreted the comments from Mario Draghi. Obviously, like I said, they were interpreted as pretty hawkish, but the ECB relaying that it was meant to be more of a quote-unquote balanced statement. So a little bit of a readjustment. You're getting the pullback. I'll show you where euro dollar turned. I actually still think this is just sort of an opportunity to fade still, but we'll have to see how the U.S. Open looks like. I want to stay constructive. Remember, broader bullish invalidation now is former resistance turned support, 153.85. I want to stay constructive while above that region. Let me snap that line for you in red. And again, you know, I'm looking for that stretch into 58.50, 59. Both areas of near-term exhaustion, key resistance for euro key. We've been waiting for this one, guys, forever. Remember what we're coming off of. Remember what we're coming. Here's the daily chart, right? This is the slope. This is where we start to look for support, maybe a couple of days too early, and this is why you kind of wait for price action to give you the validation. But certainly an outside day reversal off support with the stretch and price action coming right off the 200-day moving average. Doesn't get much cleaner than that. Doesn't get much cleaner than that. On building divergence nonetheless. So still like it higher. No change on that front. Look for the pullback to get an opportunity to get back on the long side. Again, this is one that you want to kind of chip away as it pulls back. Try to get some long entries on there. Eventually, targeting 57.35, that 50 line would be the first topside target. So obviously, depending on where we are in time, guys, don't wait for the 50% retracement. And by the way, that's something I always want to highlight. You don't want to just blindly target the fibs, right, guys? Slope is very important as well. So if you're in a trade and it doesn't pan out till later in the day and it's kind of coming up against that high, you know, obviously depending on where we are in time, pay attention to that. But all things held constant, first target zone, second target zone. I'd start to clean it up a little bit as we get near 58.37, 58.53. Questions on Euro Key? Patience pays. Patience pays. It took over a week, but we're finally getting that pop higher. All right, that's number 5. Number 6, let's take a quick dive into the previous update. Aussie dollar was on the menu earlier. Here's what Aussie looked like back on the 26th. Daily chart, we did some work on this. We were looking for basically a move out of this range while noting key support. The drop into this is really what I wanted to see to get a long exposure here on Aussie dollar. Here's what it looked like on the intraday charts. That's this zone here, right? We've kind of chopped higher, pulled back. We're now testing that same zone. Here's Aussie dollar right at 76. We didn't quite get the tag of that zone. The low was like 75.70 instead of 75.66 or 67. And you basically just set up a weekly opening range right above a near-term support. So what I wanted just to take a look at here, a couple of quick things. You see the median line here on the daily chart, basically holding resistance. You can see it on the intraday chart as well, basically catching resistance. Swing high from last week. You kind of just need to see a break of this zone, guys. Until it does, I'm not particularly fond of trying to play this pair from here. I'd rather wait for a pullback in Aussie to be long than to try to play a breakout. I don't know if we'll get the pullback, but that's kind of the game plan. Constructive near term above 75.66. Bullish invalidation. We're going to go ahead and raise that up to 75.35 at this point. Okay. Keep in mind that at that level right now, you're actually looking at the exact 100-day moving average. 200-day moving average. Even more more critical right there. So either a drop into this zone would be a nice entry, or if we do break the median line, I don't think I'll get a chance to get in, but you'll look for a pullback into that same level to give you another opportunity to get back on the long side. This could also be a near-term triangle consolidation formation, whatever you want to call it. And in either instance, you'd still wait to see that consolidation break. It still highlights that same key zone. Excuse me. Questions on Aussie? And this is my problem. To go back to your comments earlier, Sandy, this is my problem with Pound Oz. That we were looking at yesterday. I kind of just want to see some clarity in Aussie before I start to mess with any of the Aussie crosses. And that's interesting because we were looking at Aussie yen, and that's actually been playing out pretty well. But it's really more so the yen. Aussie's kind of just been marching to its own drumbeat here. So long story, let's clear this range, 76.23 into 75.67. Let's just clear this range here first and get some directional clarity on that trade. Okay, dollar yen. Since we're talking about the yen, or since we just noted the yen, here's what dollar yen looks like. That's number 7. Also something that we followed earlier in the week here on the 26th. Here's what dollar yen looks like. Near-term resistance 112.25 was the key region that we needed to get through. We probed through it. Dollar yen doing dollar yen things. Loves to do the throw over. There it is. Boom. Came right back. Still looking at that as resistance near term in my humble opinion. And again, basic slope. Okay? This is the slope we've been following for months. This is off the high from January. Caught some nice pivots. Literally caught the lows really nice. Extended off the high that we made back in May. Also converged on that region. You have the 618 retracement of the decline, former swing highs, and this 50 line for the current operative slope we've been following. All of that converged here. And that's really why we were looking at 112.25 to start off the week. So we got that clip. Where do we go from here, Mike? Well, again, you're getting momentum kind of capping out here at 60. I wouldn't be surprised, again, if you see weakness sub 111.71 to get a little bit of a corrective pullback, but you still want to stay constructive here. From a trading standpoint, I don't have anything on dollar yen. I'm not really looking to play this from here. The only thing I would want to do on dollar yen from these levels is if we do see the kickback again towards the 50 line, maybe would be the first area I'd look for. But ideally, that's still your butter zone. And a topside breach, you're still looking for this rally into these upper retracement levels. Nice pivot there, right around 113 handle. Also sliding parallel that cut the highs. Let's go ahead and drop that support to here. Possible area of interest if we do get a pullback. All right, but near term, I still want to respect this resistance region. Again, look at the daily chart. Here's what it looks like. Okay, it's interesting because the actual lows that we made so far are rebounding right off that 100-day moving average, 111.71. Oh, excuse me, it's like 111.80. So I'm just going to marker that here, 100-day moving average. I do want to keep an eye on that. Okay, so these are the amended levels here for dollar yen. If you need to take a snapshot of the screen, do feel free to do that. Again, in comparison to what we were looking at earlier in the week, not much of a change to the levels, just the addition of that 100-day moving average there, and a shift down from 111.71 to 111.63, just for that note of that swing low with the 50 line right now. Should be a little bit more critical of a support. Any questions on dollar yen? Think about shorting at the New York Open. I wouldn't be too opposed against that. I wouldn't be too against that. I wouldn't have a stop too far off against that overnight high though. Would be nice to get some kickback here. Okay. Dollar yen going once, going twice. Next up on tap, euro yen, which just absolutely ripped an overnight trade. This thing, look, I'm just highlighting this here because we had a setup on it. It took out all our topside targets. So at this point, if you're looking at this setup from the 26th, last level was 125.90. We're well beyond that at this point. So what was I going to say? From here, I don't necessarily want to advocate still favoring the long side, but I do. I still think you can get a setback. Again, this was our bullish invalidation level near term, or this was our near term support. This was bullish invalidation. We raised it as this thing started breaking higher. From here, you can actually raise this right up onto 125.90. That same target, which was our final target on the report, those same swing highs, the 100% extension, now converges on the 50 line. And for me, this would be the area that would turn me back on the bearish side. Other than that, you're looking for a pullback to get a little bit more aggressive. I think you look for that stretch into 128.88 as an easy target. Let me take this back to the daily chart. A couple of things I was looking at last night. Basic trendline support off the lows. 1 test, 2 test, 3 test, probe, but it holds. Take a parallel off the highs here. 1 test, 2 test, probe, holds, resistance, resistance, perfect tag of resistance. We broke through it yesterday, closed above. Look what today's low is so far. Okay, now I don't want to get so meticulous with price action like that, but when I see something like that and you see that price is already what? 50 pips off that low, right? And markets haven't even opened in the US yet. All right, something to pay attention to. He says, missed euro yen, it was like a launch, right, Karthik? Yeah. Yes, it did. It definitely ripped. And it was a break of the weekly open. It was a break even the day before of the monthly open. We were just below the monthly opening range. Remember that level that we talked about, the high day close, 125.36. That's what you want to see. That's what you want to see on acceleration. So long and short of it, if we get the pullback, let's get back in. Don't need this retracement anymore. Don't need this extension anymore. Don't need this retracement anymore. The high day close is no longer the high day close, but it's still a level we'll continue to watch, and that converges on the 50 line, or the median line rather. And then we'll continue to work with these extensions, which highlight, again, those swing highs. A breach higher from here, 128.88, 128.90, sort of your initial area of resistance. Any questions on euro yen? All right, that's number 8. Number 9, a real quick look. It's holding slope resistance, Aussie yen right now. Here's what the Aussie yen looks like. Another trade that we've been following since the start of the week. Here's what it looked like again earlier. Ooh, we missed dollar CAD. Can't miss dollar CAD. We'll do that next. Here's what Aussie yen looked like earlier in the week. I just wanted to highlight, remember, we opened the week just below resistance. The focus was on a break of this key range, 83.74 into 84.41. Obviously, once you saw the top side breach, initial target's 84.83. We hit that. That's now near-term support. And what we're holding at is this 50 or this median line off the lows. So that's now near-term resistance. The daily chart still has us holding with a perfect touch there as well. look, the actual key resistance zone is a little bit higher, 85.16 to 85.84. I still do think you get that. But, look for maybe another pullback into here if you're not already long. If you're holding longs, I don't want to get shaken out just yet. There is some divergence, which is concerning, but it's it's crossing or spanning 2 weeks, so I don't really like to use those too often. Take a look at the daily chart; it's not really showing up there yet. So I don't want to scare myself out of the bias just yet, but do be prepared that you could get a setback here before you start to move higher. So cautiously still bullish. Want to stay constructive above 84.25. Looking for a stretch into 85.80, 85.60 zone. That's a little bit bigger of a resistance zone heading into the end of the week. Big pivot in price as well. Okay, just looking back at price action here. So keep that key region in focus for resistance. You want to stay constructive at this point, like I said, above that 84.25, 84.40 zone. Not much new to update on Aussie Yen beyond that. Kind of fits in with, get that Aussie pullback and then rally. I don't know if it pulls back that deep, but that's, again, let me put that in red. That's our bullish inval. So as long as we stay above that, I'm looking for sort of something to fade on a pullback here. Any questions on Aussie Yen? A lot of this is going to have to do with the yen. So, if dollar yen does give us that corrective play, it might be an opportunity on some of these yen pairs to get back on the long side. That's number 9. Number 10, dollar CAD. What a beauty. What a beauty. Jamie also is crushing this one as well, as you guys are on the swing trades. We're short on this as well. Look, this was the big region we talked about yesterday, 31.40, 31.60. It took a while, and it was a slow dribble yesterday, but we finally got that clip. Next downside target, 130.62. That's just a soft target, the 88.6 retracement, but I'd be cautious from here, guys. This was the first target. Remember on the daily chart? We were ahead of time, so it hit that median line before we actually hit it. A little bit late. From here, you have this downslope in purple, which is the same as these two reference points. Nice pivot here, saw a break, instant resistance, false break, resistance, resistance. Extended off the high from back here in April. Touch, touch. Okay, with the same respect, these red lines are the same parallel of this broader scope. Let me bring that daily chart. This is a modified pitchfork off the highs from 2016. The low in 2016, subsequent high that we made this year in May. There's the median line. If you take parallels off that, same slope, break, saw support, support, break, acceleration, instant resistance. Take that same slope off the highs from late January, break, saw acceleration, support, 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 right there. So from a slope standpoint, watch out. Watch out. I don't want to jump into any fresh shorts from here, period. And with the same respect, guys, if this is a legit break, there's tons of downside room. I just think from here, maybe you go back and check former support as resistance. That would be, a rally back up as high as 32 or just shy of 131.90 would be a nice sort of swing low region, nice tag. That doesn't come in slope until basically the start of next month. So long and short of it here, guys, is I do like the bearish side, but from here, heading into the monthly close, I want to take a more neutral stance. Okay, we've been playing the short side of this for almost over a week now. So I just want to curb your appetite again, heading into the end of the month, dollar CAD. Still like the short side, broadly speaking, below 32. A break from here. What should be the targets, Mike? Well, let's look at a couple of different levels. First, you have your low day close for the year. That takes you into 30.27. Okay. Then you have the stretch low for the year. That takes you to 29.68. And the 1618 extension of the entire decline goes down as 128.90. That's a little ahead of the game there, but those are the downside targets you want to look for on a break beyond today's low, literally. 130.27 and 129.70 essentially. Now, you do have some commentary coming out today from the BOC's Polos, so you want to just keep that in mind. It could shake things up a little bit for the dollar CAD. The commentary is always kind of the factor here, but nothing I would necessarily write home about. Questions on Loonie? So new shorts at which level, says Sarub. If you're not already short from here, you'd need, here's what I could say. Again, near-term resistance is former support. So on an initial kickback, let's say the U.S. market opens, this thing just moves higher. I'd be looking for failure somewhere in this region. 3163, just former slope resistance or former slope support, now resistance. This purple line would be sort of the gutsy area to get in, or a sweetheart deal. Don't think you get quite that high. Initial resistance, look right back at that 50 line. But again, you're sort of buying this, you're selling the stretch low here, Sarub. I think you need to wait for a larger recovery. Just from an intraday standpoint, let's drill down deeper. Let's drill down deeper. Because I've been all over this, in and out and in and out. But I've been kind of playing it on the session highs and lows. So this session's kind of, you made the next spill in European trade here. So I don't want to get too aggressive from here. You know, your stop would need to be against 131.60, and your target would be 130.60. So your risk is way more than your profit is on this. So I don't really necessarily think you have a play here. If you can get back into the zone and you hold, a stop against that high would be maybe the best play to try to get the final stretch into 30.60. But that's kind of what I'm looking at near term. Make sense, Sarub? Says, got it. Right on, sir. Says, thanks. You're more than welcome. My pleasure. Just a quick touch on dollar ZAR. It's an interesting pair, again, that we brought up on Sunday, but I just wanted to show you. It's actually making the bounce that we thought. I was looking again, remember, we were talking about in the webinar, sort of entry or bullish inval was 1274.62. That's the low day close for the year. No, Saru, but I will add it on. Gold is on the list. Silver and oil. Yeah, oil inventories are today. We'll definitely take a look at oil and silver for you there, Saru. But just to quickly touch base on the setup that we talked about earlier in the week. Here is dollar ZAR. So this parallel, I deleted it since, but we did break through it. It didn't really offer any guidance, so I don't want to leave it there. But remember, this was bullish inval. We're looking for a stretch into what is that, 1324.67. Okay, I still think you get that. The weekly opening range is now setting up just below the 38.2, right below last week's highs. You know, I still like it higher, basically now above the weekly opening range low. I don't want to add, excuse me, I don't want to add too many levels here, guys, but let's just work with this right now. A break below the low day close would put us back bearish. But as long as we stay above the weekly opening range low, I'll favor the upside here. I'll favor the upside here. Remember, the slope we haven't gotten too many plays off of, but really nice touch at the median line there. So as long as we stay above the lower parallel, I'm looking for another tag of the median line, and that converges basic channel resistance right here at the 50% retracement at 1324.67. So sort of a Goldilocks level again here for dollar ZAR. And it's interesting because the dollar obviously, you know, again, something to pay attention to despite broader dollar losses that we were looking at. Really unable to materialize itself here in dollar rand, and that's just another reason that further validates we've been looking for the rebound, and dollar weakness couldn't drag it lower, so maybe the trend is higher. Interesting pair to trade. Again, intraday, I'm not really too crazy about trading it because of the wider ATR, or the wider spread rather, but definitely for those of you who like the exotics, a nice little setup there. So let's jump into some of the commodities that we've been following as well. Gold was also highlighted on that same update from Sunday, and certainly coming into a big region into the start of the week was this resistance. We didn't quite get the stretch into there, right? We talked about this yesterday. It failed right ahead. You got the pullback. Here's what gold looks like now. Still towards the weekly highs. But I just want to start off with the daily chart first. Okay. just to kind of see. This was the support zone that we were talking about. There's the rebound, turned right back, came right into support. The stretch low saw a perfect tag of that 200-day moving average, and then a rebound. From here, still, I'm of the mindset that you could see that drop in 1231. I kind of feel like this thing needs to make another low before it moves higher. I guess the intraday chart is really what has me thinking that too. Here's what it looks like. So within the intraday chart, obviously, we're looking broadly within the confines of this trendline slope, right? Still constructive. Within the intraday, though, we have this downslope we've been working with, some parallels of that pitchfork off the highs, boom, boom, boom. This is going to be your high from April, May low, June high. Has been pretty decent. Some slope, catching the lows, and that same parallel of that same slope, catching the highs, there. So 1231, I guess, ends up being the 786 retracement as well of the decline. If we bring it up into a 764, it'll probably converge right there. Yeah, right there on that basic trendline support that we were looking on the daily chart. So I still think the risk is there. Momentum hasn't really been able to make much progress above 60. So all the hallmarks that you look for are still present. I do think momentum is definitely waning. You haven't gotten divergence, but you're starting to see support around 40. So long short of it, this is the focus range to start the U.S. trade session. You'd need to see a break above 1258 to validate the breakout. You're looking for a rally towards 1270, 1272 in such a scenario. But ideally, from a trading standpoint, I would love to get a long position off this, or if you break that high, a pullback, and then I'd look to initiate a long targeting 1270, 1272. Does that make sense? Karthik, I guess this, or this Sarub, this was for you as well. Gold guys. Question is, do you have another low to make or not first? That's my question. I'm constructive. I want to be long. But the question is, was that 1241 sort of the low? Or do you make one more low and then start to rebound higher to get that basic tag of trendline support first? Yep, Sarub, I'm with you. He says that's the question I'm waiting for, the low. Yeah. And, here's the deal. When you're looking for a trade like this, if we get the low, me and you will be really happy, right? That'll be our entry. Awesome. If you don't, it's one of those trades you kind of have to just let play out. And the break above this is what would shift my attention. I'd have to look for a pullback from there to get back on the long side. And that's okay. It's better than trying to force a trade here. The FOMO, the fear of missing out on a trade like gold is not the way you want to play it. So we'll get some clarity on this one. But broadly, I'm constructive above 1231, 1258, 1259 is what you need to see break to get the rebound. Okay, that is gold. Moving right along, silver and oil. Let's take a quick look at silver. Also very clean in that we came off of a big support zone. That zone was defined right here by some former stretch lows. You had the 786 retracement. We went over this yesterday. We kind of pivoted right off that near-term resistance being tested right now to basic 38.2 and those former swing lows from March. So same type of deal. In silver, to be quite frank with you, I kind of don't want to see a new low. I want to see this thing hold. It's probably a better slope to work with for now. I kind of want to see this thing hold here, give us a pullback, and not make a new low. I think silver, unlike gold, has a little bit more, what's the word, evidence that we've kind of already bottomed. I know it's a big statement, but look at the near-term slope, guys. Again, I only make assumptions like this when price action is sort of speaking to me. That's what I'm looking at here. Look at the 120 minute. This slope we've been following off the high, this is the same slope, guys, we've been working literally for 3 weeks. Yeah, the lower parallel was really messy, okay? But guess what? Take a parallel of that same slope. 1 touch, 2 touch, 3 touch confirms. So that's on building divergence into that low. So I'm of the mindset that, you look higher here. Even if you get a setback, you want to stay constructive above 1643. It's the low day, it's the close low for the month. And it also converges on the lower parallel for that current operative slope we just added yesterday and former slope support. So yeah, you could see a spill in both gold and gold and silver, but specifically in silver, I'd want to buy it somewhere near 1643. Again, topside targets 17 essentially, and 1717 would be a 618, the upper parallel. You get the picture. But yeah, I do think you risk a little bit of a pullback from here before you start to rally. The break of the weekly opening range didn't really see the rally you'd like to, the ripperoo you'd like to see. Plus you have the median line right there. I hope 1231 is last low, says Karthik. Are you talking about gold? I mean, dude, if we get that pullback, I'm with you. I would love to be long off that level. I just don't know if we get all the way down there. Could sort of be a washout trade too. A level like this, I wouldn't even be surprised if it comes on Friday. Markets are thin. You're heading into that core PCE inflation number. If you get some sort of upset on that, that would be, I think, perfect opportunity to fade it if kind of just knee-jerk reaction rocks it into that low. Maybe I'm talking in hypotheticals and more wishful thinking than necessarily a trade strategy, but yeah, it's a big level. 1233, 1231, big level for me. All right, so we got silver, we got gold, and we are towards the end of the session here. So let me go over oil and sterling key real quick. I promised I'd do those both. So here's what oil looks like. Obviously, oil inventory is coming out later today. We have this near-term embedded descending channel formation. We were talking about resistance there yesterday. It broke channel resistance, checked it as support, rallied again, but we're still holding the opening range highs for the week. So look, I like a rebound higher here. Again, one of those trades where now you've had this is the 5th consecutive day of rallies. Yeah, you could see a little bit of an exhaustion play again, but still looking inevitably for a stretch into 19, the former swing lows that we made back here, specifically on the 8th, which I would count as the monthly opening range lows before we broke. And that converges on the median line for the current operative structure we've been following, right around 45.20, 45.19 area. So it looks pretty good. Looks pretty good. Again, inventories are on tap later today. Just want to see if this, bear with me one sec, offers any guidance. Not really. Not really. Okay. I'll tell you what it does highlight, though. It highlights support at the weekly open. Okay. Constructive above 43. Looking for a stretch into 45.19. Make sense? Again, crude inventory is on tap just after the close of the webinar here, guys, so keep that in mind. Last but not least, pound kiwi. Pound kiwi. And if we have time, which I don't think we do, Sandy, we'll take a look at pound Oz too real quick. But here's what pound kiwi looks like. Oh, this guy. Right. So what can we say about pound kiwi? You had an outside day reversal again yesterday at the lows of the year, or at the lows of the month, rather, on building divergence. So the rally now just shy of the 200-day moving average. So look for some resistance there. The real kicker is going to be the yearly open, which coincides on basic slope resistance. This is a slope we've been following off the highs from, what is that, September of last year. Hasn't been the cleanest slope, but it caught the lows last year perfectly. Excuse me, this is off 2015 highs, but last year's lows literally caught it perfectly. Nice little median line there. Resistance, resistance. Break was more or less support. That converges on the yearly open for 2017 at 177.97, just shy of the 178 handle. Let's see if there's any near-term slope here. Bear with me one sec, guys. Not bad. Support, support, resistance, resistance. And the 50 line comes in more or less in line with that level we were looking at. It's the 2017 open. Oops. I just want to see one thing. Was there a retracement that caught that low? Wow. 764 was right on it. Whew. I don't know how we did not have that on there earlier. All right, so 1730, or excuse me, 173.30 was literally, we just missed that by like 4 pips. The low there. Trying to figure where your bullish invalidation is on this. Honestly, it would need to be down here. I'm going to go ahead and scratch that 74.80 target, which is just a former swing highs here. I'm going to bring it down just a little bit to this former swing low. That gives you 74.40. A little bit better confluence with slope. So this is your near-term bearish or bullish, excuse me, invalidation level. As long as you maintain support above 74.40, you want to be looking for that rally up towards the yearly open at 177.98, 178. I was long from yesterday at 174, but I'm out already, says Sandy. Look, you got out at a decent region because that median line could charge a kickback to the 50 again. This would be my entry. This is bullish invalidation, but I like the long side. Objectively, this was a break of the initial weekly opening range, so that actually lines up with the 50 line as well. So possible re-entry at 75.40, 75.60 for me. Topside break, obviously, like I said, you're looking for that rally towards this 50 line, the yearly open, former slope resistance or current slope resistance. Looks good, Sandy? Does that make sense on pound key? That was 12, 13, 14, and pound key was 15. Nice full day. Guys, we'll go ahead and wrap it up here. Don't forget, Jamie's on tap at 12 Eastern, so I encourage you guys to stick around for that. I will be back tomorrow morning at 8:30 to wrap up the week. Again, this is the time where you want to lighten your leverage and you want to be a little bit more meticulous on your positioning, guys, as we head towards the end of the month, end of the quarter, holiday weekend on tap, and major key U.S. event risk on Friday. So if you're got the kahunas for it, we still got some volatility up on tap, so keep that powder dry. All right, guys, we'll see you tomorrow morning. Best of luck trading. Cheers.